all these things will have to be inquired by the auditor, and then only he can say that the company is maintaining proper fixed asset register. Now, company has maintained fixed asset register, but it has to also show certain important information. Now, what these information can be? One of the information or one of the criteria can be the date of purchase, the date of good to use, the name of the vendor, the amount, the bill number. Very important, the location of that particular asset, whether the management has done the tagging of the fixed asset or not, whether it has got a barcode or not. Now, it may so happen that company may not be following the barcode system, but it can have a manual serial number. But all these things will have to be seen by the auditor. And there is another clause which comes after this clause which talks about physical verification. So when the management does the physical verification, the management will try to tally the assets physically verified with the fixed asset register. So unless and until the fixed asset register does not show the location of the fixed asset, you will not be in a position to tally the fixed assets. Now, this is the first clause. Then, whether these fixed assets have been physically verified, the management at reasonable intervals. Now, what do we mean by reasonable intervals? Yeah.
Intangible assets.
Yeah.
Intangible assets, we face a problem with these are projects. So, capitalization of assets. Until the intangible asset comes into system.
Correct.
In that case, what is the relevant guidance? Can you just go?
So basically,
In what way you give work out some basis? Like man hours you take for the project.
yeah. So the situation you are talking about is mainly related to intangible assets under development, which we call it in accounting parlance. So far as fixed assets are concerned, we have a terminology of capital work in progress, but for intangible assets, we have a terminology of intangible assets under development. Now, in such scenario where there is a project going on and ultimately it has to translate into intangible asset, considering the criteria of accounting standard on intangible assets, there will be a continuous expenditure being incurred by the company. Having ascertained that this particular expenditure fulfills the criteria of intangible assets, since the requirement in CARO 2020 is also about maintaining register for intangible assets, it will also include maintaining register of items which are still in under development stage. So in such cases, the company may have incurred certain expenditure on manpower or other technical items. So in the fixed asset register or in the intangible asset register, company will have to give the details of the entries passed, what are the supportings which the company has gathered. So say for example, in case of manpower cost, now company would have already passed entry in the intangible under development ledger. So the intangible asset register will need to give the details of that particular entry, the amount of expenditure debited, the brief summary or the brief nature of the expenditure incurred, and there can be a remarks column where company can give certain additional information. Now, so far as we as an auditors are concerned, we need to check that these entries which are in the intangible asset register, they faithfully give the representation of the intangible expenditure on intangible assets. In any case, for financial reporting purpose or for accounting purpose, we'll need to check those entries along with the supportings. So, plus in the remarks column, the companies can also give the references of the invoices, names of the vendors. Now, company may have applied for patent or trademark or copyright, and company may have incurred certain expenditure. So company can mention in relevant columns of fixed asset register or intangible asset register. I'll talk about fixed asset register interchangeably with intangible asset register. So all these facts have to come in intangible asset register, and then only we can say that company has maintained proper records so far as intangible assets are concerned. I agree with you that since this clause has come into picture for the first time, company may have to dig up the old records because अब तक क्या होता था कि intangible assets under development would directly come from the ledger accounts and it used to get accumulated over a period of time. So details ही नहीं थे. But now that closing balance will have to be bifurcated over a period of time in fixed asset register. So that can be a challenge, and that is where our role comes into play, that these changes will have to be communicated to the management well in advance, that these are the requirements of CARO 2020 and you please prepare the intangible asset register and give all these details. Yes, I agree with you. This can be a challenge. So again, see, internally generated goodwill is not allowed to be capitalized. If you have any purchase goodwill and if it fulfills the criteria of accounting standard, then we'll have to see the relevant acquisition when it was made and how the goodwill was calculated. And the fixed asset register can give the details of that. The year of acquisition, if there is any impairment done on that particular goodwill, even the impairment will have to be shown in the fixed asset register. This is very important point, that when this fixed asset will have to be checked for impairment on a yearly basis. If there is any impairment in fixed assets, that impairment will have to be also brought about in the fixed asset register. When the impairment testing was done, what was the amount of impairment, all these things will have to be mentioned in the fixed asset register. Then the third subclause, whether the title deeds of all the immovable properties other than the properties where the company is the lessee and the lease agreements are duly executed in favor of the lessee, disclosed in the financial statements, are held in the name of the company. If not, provide the details thereof in the format below. Now this clause was already there. This is the change. And earlier there was no table. Now the CARO 2020 also gives the table in which the reporting has to be done. Now the table requires description of the property, gross carrying value of the property held in the name of whether promoter, director, the relative or employee, period held, indicate range where appropriate, reason for not being held in the name of the company. Now, friends, for this, for reporting under this clause, we'll have to check the fixed asset register, we'll have to check fixed asset ledgers, check whether there are any immovable properties lying in the fixed assets, check the title deeds whether they are held in the name of the company, and report. If there are certain properties which are not held in the name of the company, then we have to report in this particular format. Earlier there was no format given. Now CARO 2020 specifically gives the format. Earlier the format or the reportable format was given in the guidance note. Now this format has come in CARO 2020. Now, can anybody tell me that what are the circumstances under which a title deed may not be in the name of the company? Yes, so lease is fine. So whenever there is a lease agreement, demerger or certain acquisitions, okay. So even in those cases, we'll have to report, and in the remarks column or in the reason column, we'll mention that this property was taken over by way of acquisition or demerger. So this is very important. So again, it is very clear that it will be applicable only to property, plant and equipment. If the property is held as investment property, now investment property is basically a phenomena of Ind AS. There is a particular Ind AS on it. However, in ACE companies also there can be investment property. If the property is given by way of rentals and companies only getting rental income out of it, then it will be treated as investment property and it will not come in the fixed asset schedule. So even those kind of immovable properties would be within the coverage of this particular clause. However, like he mentioned, if the property is held as a stock in trade, then it is not covered within this within the scope of this particular clause. Now,
what happens in case of the, they are permanent, there's a property system, there was a through of those lifeline licenses. what happens to that? You get out of the deputy, don't have to
But that
report.
is the right. Pagdi is a tenancy right.
No, tenancy right, but actually the companies are all having this tenancy. They are the.
I would say that since if the asset is still lying in the books of the company as an asset, as a fixed asset, and if the title deeds, of course, पगड़ी में तो कुछ अपने नाम पे होगा ही नहीं, वो तो लैंडलॉर्ड के नाम पे ही रहेगा. We only pay the rent. रेंटल रिसीट अपने नाम पे आती है, कंपनी के नाम पे आती है, या इंडिविजुअल के केस में पगड़ी सिस्टम ज्यादा होता है. तो आई वुड से दैट बाय वे ऑफ abundant caution, we should give the disclosure.
Pagdi, but Pagdi is intangible.
Like, you know, there are many companies, civil and all, cotton
See,
company,
but
they are having all the companies.
But that will be an intangible asset.
So it again depends where the company has classified it. See, बहुत सारी companies में as a legacy it is coming by way of fixed asset, because company would have done certain subsequent expenditure and it is coming by way of fixed asset. So again, it depends on the facts and circumstances of the case. Wherever we feel that, I think we should err on the side of the caution and give the disclosure. If it is coming by way of intangible asset, then since the nomenclature is property, plant and equipment, then this clause would not be applicable. And when we say right of use asset, it is basically Ind AS phenomena, ROU asset,
It's a lease.
lease. Again, this clause talks about whether the revaluation is based on the valuation by registered valuer or not. So there are two questions in this particular clause. If the company has done any revaluation during the year, the revaluation was registered valuer of not. See, again, under the Companies Act, if there is any revaluation done of property, plant and equipment, if the revaluation was based on the valuation report of registered valuer or not, we have to simply mention that.
What about fair value accounting?
No, so
If somebody is under